Commercial LPG price hike. Latest news. The government announced a sharp 933 Indian rupees jump in commercial LPG cylinder prices, 19 kg cylinder, taking the price in Delhi to 3,071.50 Indian rupees. While domestic LPG, petrol, and diesel prices remain unchanged, the hike has sent shockwaves through India's vast ecosystem of small food businesses, restaurants, roadside eateries, caterers, bakeries, and cloud kitchens. The hike is directly linked to the disruption of global energy supply chains caused by the US-Iran war and the blockade of Iranian ports. What is commercial LPG and why does it matter? Domestic LPG, 14 kg cylinder, is used by households for cooking. It is subsidized and politically sensitive. Commercial LPG, 19 kg cylinder, is used by businesses, restaurants, hotels, caterers, cloud kitchens, bakeries, and canteens. For millions of small food businesses, cooking gas is not just an input cost, it is the business itself. A spike in commercial LPG prices therefore hits the informal economy far more severely than headline inflation data suggests. The timing makes it worse. The price hike arrives at a particularly vulnerable moment. India's smaller enterprises were already struggling with weak consumer demand, elevated raw material costs, thinning profit margins due to global supply disruptions from the US-Iran war. Adding a sharp fuel cost increase on top of these existing pressures risks triggering a chain reaction across the economy. The chain reaction: how one price hike spreads. The economic impact of this hike is not confined to restaurants alone. It sets off a cascade of consequences across multiple layers of the economy. For businesses, restaurants and eateries face higher operating costs. Those with wafer-thin margins and dependence on daily cash flows, particularly small operators, roadside stalls, and cloud kitchens, have little financial cushion to absorb the shock. Several operators are already scaling down or shutting temporarily. For workers, if restaurants and eateries are unable to do business, the first ones to get hit will be people down below. Informal workers paid daily or weekly face reduced shifts and lower earnings. For consumers, businesses will either reduce portion sizes or quietly increase prices, passing costs on to consumers. This fans food inflation, which economists note is a tax that hurts the poor the most. For the broader economy, small suppliers that depend on restaurants, vegetable traders, dairy vendors, transporters, packaging units, and local wholesalers begin seeing weaker orders. SMEs linked to hospitality and food services face slower cash flows. This weakens local demand cycles that support small businesses across urban and semi-urban India. Government's approach: shielding households, exposing businesses. The government's decision to keep domestic LPG prices unchanged has helped avoid immediate public anger and household inflation. However, experts highlight that the economic pain is simply arriving through a side entrance through commercial kitchens, small enterprises, and the informal sector. They noted that a supply shock is apparent in the economy and warned that accompanying demand compression is a serious concern given high prices, rising inflation, and a reduced pace of economic activity. The PNG alternative: opportunity and constraint. The commercial LPG price shock could accelerate the transition from cylinders to piped natural gas, PNG, a shift that policymakers and city gas distributors have been pushing since the war broke out. Advantages of PNG over commercial LPG. Continuous 24/7 supply through pipelines, no repeated refills or storage logistics needed. No risk of sudden shortages during periods of disruption. Safer: PNG is lighter than air and disperses quickly in the event of a leak, unlike LPG, which can accumulate in enclosed spaces. Operationally smoother and potentially less price volatile. Limitations of PNG transition. PNG connectivity remains patchy outside major urban clusters. For thousands of small eateries, roadside establishments, and informal businesses, shifting infrastructure and obtaining approvals is itself an added financial burden at a time when operating costs are already surging. The deeper structural concern. Analysts highlight a troubling structural pattern in India's economy. Formal sectors and large corporations continue to expand, while smaller businesses struggle with profitability and weak consumption demand. Large restaurant chains can weather the storm through scale and pricing power. Small operators cannot. India's growth model still relies heavily on millions of low and middle-income consumers spending small amounts frequently. Any sustained rise in everyday food and service costs chips away at discretionary spending, weakening local demand cycles across urban and semi-urban India. One cylinder price hike may not look dramatic in macroeconomic data. On the ground, however, it can quietly become a shock that spreads everywhere.